Hey everybody, it's Steve and Levi here again. One more video today to talk about the duplexes that we've been working on in Fort Worth, South Fort Worth to be specifically. Levi knows a lot about this one. There's a long story. We won't get into it today behind this project, but we've got 10 duplexes on East Powell Street in South Fort Worth. Levi, tell us a little bit about how this one came to be, and then we'll get into the numbers.
Yeah, so we bought these lots several years back, and the short version of the short story is that we were granted permits to start 4 of the duplexes, and during the course of construction, we determined that the utilities actually didn't go all the way down the street. They didn't reach the lots that we had purchased. So of course the city, put the shutdown on that whole thing, and then they don't put utilities in. They let the developer put utilities in. Well, we aren't the developer. We just happen to own these 10 lots. So they forced us to become the developer. And anyway, we're finally to the point where we've gone. It's been a long tennis match with the city, and now have everything that we need to do the utility work. And because of that, they've given us the green light on continuing work on these 4 started duplexes here in this East Powell Street location.
Yeah, these 4, because we have 6 other lots that we're putting duplexes up on in our investor build program. So if you're willing to take on construction financing, if you're all cash, or if you're looking to maximize the benefits of the federal opportunity zone, which these are located in, and I'm hearing they're bringing back all the benefits in the big, beautiful bill of the opportunity zone, that of course we'll see how that unfolds. You should definitely reach out to us about the investor build options, because they are available at a wholesale price and they work best for those who can go cash or can get construction financing, which we can help you with. But if you'd much rather just close on a finished leased duplex with a locked in low interest rate, I think these are a good one for you. So we're offering them at $430,000 per duplex. We've got 3 of them left as we record this. And I think one thing that's worth mentioning is we have really crammed that interest rate down via a forward commitment. We try to do that as much as we can on our deals. Sometimes we can, sometimes we can't. But this one, the rate is a 4.99 on a 30-year fixed. So you can close on that when the property is done. Take us through the high-level numbers, if you would, Levi, and then I'll get into the long-term numbers.
These duplexes will be sold at $430,000. So that's a down payment of $107,500. With your purchase costs, you're in these for $116,000, almost $117,000. So it's a modest investment for a brand new duplex. Now, these duplexes are smaller duplexes because that's what this area demands. They are 2-bedroom, 1.5 bath units, real efficient design. They have 1-car garages as well. And this location is just south of downtown and a little bit east. Great transportation. Got I-35 right there. It's super close to Hospital District and downtown. Easy to get on 287, which takes you to Arlington and to the southeast. So excellent location. The numbers in terms of rents, gross rents at $3,200 a month, and that leaves you cash flow at about $135. So it's not huge in terms of cash flow, but over time, it definitely it improves and is a great opportunity to have inside of DFW with appreciation, the appreciation of DFW and the population growth, which drives demand on all of these.
And so I would add that we've got a 5% vacancy rate built in. We manage a lot of properties in this area on the south side of Fort Worth. I don't know that we're at 5 right now. We're full, aren't we? Last I checked.
Yeah, I believe we are.
Yeah. And I think you can read a lot of articles out there about high vacancy on new construction in the Sun Belt, which is Dallas, and Fort Worth is in the Sun Belt. But that typically is around Class A apartments and new deliveries. When we deal with affordable housing, and I don't mean Section A, I mean housing that is low cost, right? There's always demand, right? With the inflationary pressures that people feel, it just costs a lot to exist these days. So if you've got affordable rent, people are going to want to live there. And then I would add, normally we don't do 2-bedroom units, but when you're in downtown or on the periphery of downtown, that's a demographic that is much more suited to that kind of square footage and that kind of a bedroom and bathroom account. And they all do have attached 1-car garages with driveways as well. So tenants would probably park a car in the driveway, maybe one on the street. They might store a bunch of stuff in the garage. Some do park in the garage. I've seen all kinds, but it gives them some options. And it's it's not flashy, but tenants want to know they got somewhere to put their stuff, right? That goes a long way. So I always like to hit page 6 of the pro forma just to show you what happens to return on investment. I'm looking at my iPad here, and rate of return. And, that's year 3. So in year 3, we immediately jump up to a double-digit return in excess of 23%. Our IRR hits 7.2, and then it just gets sweeter from there. So if we see, and we're going to do a video on this, well, what if the values compressed, right? I don't think it's likely, but I lived through 08, and I'm not going to sit here and say that that's not possible. That would be irresponsible. But if the values compress, we want to do like a stress test video on that to see what happens to your returns. So that'll be coming. But if we just plot along at 3% growth on expenses and income, you get these numbers. If we get better growth or we get a decrease in interest rates, this really gets a little bit crazy. And so I just say that to illustrate the point that don't get hung up right away. If the deal cash flows for you today, then let it cook. My son plays basketball. They always say, let it cook. I'm cooking. I'm not cool enough to say that. He's going to be mortified when he finds out I said it on the podcast. The podcast that he doesn't listen to nor know exists, but I'm still going to mortify him. So those returns get really excellent year 3 forward. I would encourage everybody to look at that. And one thing we're always happy to do at the Peak Group is help you run those scenarios. What if this happens to the rent? What if that happens to the interest rate? So you can kind of see the boundaries that you're willing to play in and assess whether the tolerance is right for you or not. So thank you for the explanation, Levi. Anything to add on East Powell before we hang it up?
You can take advantage of the benefits of the opportunity zone. That's a plus. And really what that means is there's a lot of other good things going on. And you'll see in this area that it was an area that the lots were laid out a long time ago and not everything was built. So honestly, the average age of properties in this region is actually going down because of all of the new builds that are happening in the areas. It's a great area.
Awesome. Thank you, Levi. Catch you next time.